Hi everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is April 30th, Tuesday, and we are in the last hour of the trading day, which I consider the most important because I believe that the closing prices are the most valid prices of the day. So thank you so much for tuning in today, and what we're going to do, our regular format is, first of all, we're going to have to run the legal disclaimer. Then we're going to take a look at the major market averages, see what's going on there. Then we will go through my current positions, what we have, where we entered them, why we entered them, and how we're going to manage them from here on out. And then we're going to turn to my watch list, and we're going to go through each one, and we're going to see if there's anything interesting that I might buy today if we have any setups. And then at the end, after the market closes, if there are any questions, then we'll do a little question and answer. Sound good? Okay, so let's just go ahead and run the legal disclaimer. It's 40 seconds, so please hang on and I'll be back in 40 seconds.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, there we are. So, all right, what's going on today? It's kind of an interesting day. We've had a little volatility come into the market. Let's take a look at the Dow first. Google had earnings last night, and the market didn't like the results, and I believe that is having an effect on the entire market. But you can see the Dow opened here, sold off quite a bit actually, but it's been able to recover. So we're in the 62.73 RSI range. Was a little high up here in the near 70 in the third ATR channel. So it's good that it's being able to recover. We have Apple's earnings tonight, which I'm sure is going to have a large effect on the market in general. So we'll have to wait and see what happens with Apple. The Tues, you can see it gapped down, I think mainly due to Alphabet or Google. We gapped down, we went down quite a bit further. We've been able to recover. Looks like at the moment we're recovering the 10-day moving average. But I would like to see this get down into the 20-day moving average range in order for me to look for some kind of entry back into the Qs. The SPY gapped slightly lower, went all the way back down, right back down to the 10-day, like a lot of the indexes, and has been able to reverse. We're back over 70 RSI. Into the parabolic range, so I'm sure Apple's earnings are going to make this go one way or the other because Apple's such a large component of the S&P. The Russell 2000, the mid caps, did open slightly higher, moved down pretty substantially, and then rallied back up. So it's at a 57.71 RSI. So kind of neutral RSI, but really there's nothing there for us to look at. Okay, let's take a look at my current positions. So this is Dexcom. I bought this back on the 18th of April, and the reason that I bought this is because here we have a low, we make a lower low, which a lower low is not positive thing, but the lower low did come when we had a divergence, meaning you see the readings of the MACD bars here, how low they are. We attempted a rally, we failed, And even though we came lower than the previous low, the MACD reading did not go into the red. It's called a missing right shoulder. Just essentially means the momentum mathematically was not as strong as this first drop. So that was one reason I bought it. The other reason is that we had a V1 entry, and a V1 entry means when this bar washes out the previous bar, this went lower than previous bar, reversed back up and closed above the close of that first bar. That was the second reason I bought it. And the third reason I bought it was we tested, here we were in a range, and then here we broke to the downside of that range and then immediately reversed back up into the old range, which is positive. So double bottom with a bullish divergence, we had a V1 entry, and we had a false breakout into a new range that reversed back up into the old range. And as you can see, that's been a really nice trade for us. I believe yesterday it was up close to 10%. I did phase out up till here. I phased out of about 70% of my position, which I always do. Today is a tough one. This is a tough one, whether or not I want to just lock it all in. We do have earnings on the 1st. That's tomorrow after the market. But you see this previous high over here. That used to be resistance. Now we've broken out into a new range and have come back. This is acting as support, and it's almost exactly where it got to. And the price is about halfway of this large bar too, which makes this kind of a tough one, whether or not I want to hold it or not. I mean, obviously we're going to see what happens at the close of the market, because that's where I take my signals from. My feeling on this is because it is holding support here and it is holding support at that half of this large momentum bar to the upside, and it did test the 5-day moving average, that I probably will hold it one more day. You know, the beauty of phasing out is that I'm not dealing with the full position here. I'm only dealing with 30% of my position, which makes it a little more flexible for me to risk open profits because I've locked in so many profits already. So we'll see what happens. If this closes below halfway of this bar and or closes below the 5-day and closes below the previous day, most likely I'll probably lock it in. If it hangs out and stays right where it is right now, I will probably keep it. So just one of those, it's just one of those kind of difficult situations where you're pulled, you know, half to one side and half to the other side. But because I have phased out of 70% already, it doesn't make it as emotionally important. Although it's, you know, you have to be important with your signals, but I'm looking at this very objectively, and there's still a lot of plus signs of where it's holding support. Okay, Etsy. I bought Etsy on the 25th of April when we had this strong move up above the 50-day moving average. We took out this previous range here, and it came on strong volume. I only took a half position because I was hoping to get filled a little closer back in here for my full position, giving me a little better risk to reward ratio. Yesterday I did hit 2 profit targets. Today we are down from the entry on this trade, and generally when I'm in the money and it comes back out of the money, you know, I tend to just get out of the position. But you know, I am actually in the money because I took profits all the way to there. So net on the trade, probably close to even. But so we did test the 50-day moving average here again, and we tested it quite strongly, and we're closing back above, which kind of makes me lean to the side of holding this position. You know, if it closes below the 5 as it is right now, I may take it off. I mean, if it closed back up in here, let's put it this way. If it closes above the 5-day moving average, which in turn will make it close above this low here, I probably will keep it. But if it closes below this low, closes below the 5-day moving average, I'll probably just take it off and call it a scratch trade. It's a big day down, large range, which I don't like, although we have recovered a lot, and it did reject the 50 again. So, this is a tough situation here, but hopefully at the end of the day, it will give us a little bit more clarity on what we want to do. Okay, so Intel we bought yesterday. The reason we bought right there at this little dotted line. The reason we bought there is because we had a rare occurrence of the 30 RSI. At the same time, it found support at the 100-day moving average. So, it's important to, when you look for setups, to find multiple indicators that are lining up your way. And the two that were lining up for me here, again, is that it stopped short of the 100-day moving average, and it also was very close to the 30 RSI and closed above. So, and thirdly, we're at the 6 ATR channel here. So we are slightly up on the trade. That it did stop exactly where we were hoping it would stop. We have not hit a profit target yet today, but I'm just glad in the bigger picture that it was able to hold this level. So right now, as is, I will keep this trade until we close below the 30 RSI. And I also only took a half position in this trade because of this big move here. So we will see what happens. A close below the 30, and I will get out Intel. If it goes our way, I will phase out. Here is the 50-day moving average. This is likely a spot, if it does move our way, that will be my profit target. But again, if I'm wrong small. If I'm right, I have the potential to make multiple times what I'm risking to the downside. And that's what trading is all about, having small losses and having larger wins than your losses. Ideally, two times potential to the upside compared to what you're risking to the downside. So this does not mean it's going to go up, but if it does go down, I will be taking my loss as quickly as possible. But if it goes up, I will give it some room until it gets up to a level that I think it's going to find some resistance. Okay, SPY. As most of you know, I do purchase the SPY every day at the close, and I'll go through this quickly. Since 1993, if you bought SPY on the open in the morning and sold each day at the close in the afternoon, you would have returned a negative 5.2% return. But if you did the opposite and bought on the close, bought at the end of the day, sold first thing in the morning, the return would have been 568%, meaning that more than all performance came in after hours trading. So, this doesn't mean this just goes up, right? I mean, you can see long term this has been a staggering return, but it does have drawdowns, right? It does not work all the time, but nothing works all the time. You want to find a trading methodology that has positive back tests, that show that it does have some kind of an edge. And this is a long back test, and it does show that it has an edge. Maybe the edge stops working today, right? Maybe it does and never works again. You never know. That's why you have to, take a small position size, follow what the system tells you. But I've been doing this for about 42 trading days. And it has been a profitable approach so far. But again, small position size, small wins, they add up. So it takes a while to accumulate profits, unless you just are a big gambler. And trust me, that's the quickest way to go broke. Trying to get rich fast is really the fastest way to go broke. You want to acquire wealth slowly, conservatively, over time. All right. So anyway, I did purchase this here yesterday, sold at the open, small loss. Lately, they've been small losses, small wins, small losses, which is fine. So I will buy that again today at the end of the market. All right. So here is the VIX. I did buy the VIX here. The reason I bought it was because we had this V2 entry. This bar took out this bar. This bar reversed strongly, closed above the first day's close. You know, that's a V2 pattern. So that's one reason that I bought, that I entered this trade. The other reason was that it closed back up above the third ATR channel, which I did like. And the third reason was that the Dow was continuing to make higher highs and the VIX kind of started moving sideways, which is a divergence, because the VIX is basically the number for the VIX. It's a function of how expensive S&P puts are getting. So the market was going higher, but the VIX stopped going down and kind of started to find some support, and that's the reason I bought it. It was a good trade. I bought it here. I hit 3 profit targets the next day, then it moved back down again. Today I hit another 2 profit targets. So I'm essentially break even from where I bought it on the trade, right? But because I took 3 profits here and 2 profits here, I'm definitely up on the trade, even though the final price is close to where I bought it. That's why I'm such a fan of phasing out. You know, if it goes up and you get out of 10 or 20 or 30% of your position, then it comes back down. Well, you're not happy that it came back down, but you are happy that you were able to get out of some of the position at a higher price, at a profitable price, and then mitigate the loss when it comes back down. Because if you got out of 25% on the way up and then it comes back down and goes net loss on the trade, then you've mitigated that loss by 25%. So as you can see, I got just right here and I got just the top of the day there as well. So I only have 50% of this position now. Okay, so those just real quick. Dexcom, a recap. Dexcom, if this closes below halfway of this bar, closes below the 5-day moving average, or close below the previous day's low, I am going to just lock in that entire trade. Etsy, if it were to close right here, right now where it is, I would also take off the entire trade, because right now it's below the 5-day and below the previous low. Intel, I will keep this as long as it holds the 30 RSI. SPY, I will buy this at the end of the day. And VIX looks fine. Where would I get out of VIX? Probably a close below this previous low or a close below the 30-day moving average. So, all right, so that's kind of a recap there. And so now what we're going to do is we're going to go through my watch list and see if there's anything that kind of catches our fancy today. So let's take a look. Okay, so Apple has earnings today, which is certainly going to be interesting. Where's it going to go? I have absolutely no idea, and I don't think anyone does. I think the smart thing on Apple, if you're looking to enter Apple, would be to wait for earnings to come out, wait and see what the stock actually is going to do, and then make a decision then after the information is out. But right now it's, you know, in gambling mode. So will be interesting, and I believe it will have effect on the market as a whole. Amgen, you know, we broke down below that 200 very strongly. We attempted a little bit of a rally. We have just moved sideways. Looks like we have earnings today on Amgen as well. Amazon, You know, we had earnings here. It went up strongly. It's come down so far. It's come off of the 70 RSI. Whenever something's above the 70 RSI and then closes back below it, to me, that is a signal to get out of my long. Because people hold, you know, a lot of swing traders and traders like to hold it as long as it's above 70 because it's very strong. But when it closes back below, that's a good time to exit the trade. So nothing on Amazon. Boeing is just moving sidewards here. In order for me to get interested in Boeing, probably have to at least break out above this range, but ideally I would like to buy another close below the 100 or back above, or a close below the 200 and back above. So nothing on Boeing right now. Alibaba looks like it's lost its 20-day moving average. This is the blue line. Definitely not interested in Alibaba here. I would be interested in Alibaba if we could get down and test this upward sloping 50-day moving average. Caterpillar did bounce nicely off the 50. It's moved up, down today. It's a 54 RSI. Yeah, I don't think I'm interested in this. What I really like to see it come back down is come back down, make a higher high, test that 50-day moving average again, and then go up. The people that bought down in this range most likely sold into this range, especially if it closes down today. I'm almost certain that the people that bought in this range will sell. And on the positive side, that will get rid of the sellers. And then if we're able to come down and then move back up over the 50, you have you have fewer sellers that you have to contend with. But I'm not interested in Caterpillar right now. Canopy Growth. Well, Canopy Growth had a nice gap here that moved up today. It looks like we've had a reversal here. You can see yesterday we did close above the 70 RSI. And when that happens, a lot of people are, wondering, well, where should I sell? They'll probably sell when it closes below the 70, and it looks like it might today. So for me to be interested in Canopy Growth again, down in this range, probably the 50-day moving average or 20-day moving average if it gets down there. Dow Jones we talked about was down much further today. Has made a majority of that back, but there's nothing interesting there for me today. Dexcom, we just talked about that. We do have this position, close below this previous low here. That's where I'm going to put my line in the sand. So we'll see how that ends up. eBay gapped up, moves sidewards. It's just consolidating. I don't think I would buy to the upside. I would most likely want to buy it somewhere in this range right here. Ideally, the 20-day moving average to come down. Nice orderly down movement. Stab below the 20, have it rejected, reverse back up, and get triggered into a trade with the V1 or V2 entry. Etsy. We do have Etsy. This is a difficult one. We're just going to have to wait and see where it closes. My gut, though, is to sell it today. A lot of volume, big range bar. Yeah. Unless it has some kind of miraculous reversal, I will most likely get out of Etsy. Facebook. Attempted to rally. We had earnings here. Immediately went down. We had a attempted rally about here to the halfway mark, and attempted again today in reverse. So I would have to wait at the very minimum, probably in this range, the 1 ATR channel, for some kind of entry. It's still above 70, so it's still quite overbought. So 5 below finally had a down day. That thing has been going up like crazy. Still over 70. If I owned this, I would keep it until it closed below 70. The Swiss franc. Well, as you can see, we had a big down move. We have moved sidewards. We're forming a bit of a base here, but there's really no particular buy signal. The only buy signal that I could kind of pull out of my hat on this would be a close back above the 30-day, but there's no previous double bottoms, any other support other than that 30 RSI, so I'd probably leave this one alone. General Electric, big day. We bought this we bought this here on the 26th when we had a test of the 100 that was higher than the previous test. We closed over this range. We bought near the end of the day. We knew earnings were going to be here, or were going to be announced today in the morning, so we had to get out of the trade yesterday in the afternoon. But it was a nice little trade. It was a nice little one-day trade. And all those little things add up, right? All those little wins add up. I mean, obviously in hindsight, it would have been great to have kept it. It would have been a huge move, but we didn't know it was going to do this. It just as well could have gone down. So it's just good policy not to gamble in front of earnings. Gold. Well, we had a strong move down, move sidewards. We bounced down, reversed, which was positive, and it has moved up from there. It's a 46.81 RSI. You know, I would imagine that it's going to find some resistance at the 50 RSI, which is probably up in here. At the same time, it's going to find some resistance of this 100-day moving average. So in order for me to really get interested in, it had a MACD positive, MACD crossover, which is positive, but not enough by itself. In order for me to get interested, I would need the 5-day EMA to close above the 20-day EMA. You know, that's a back test that you can test, and it is, you know, up till this point it has tested positively over the long term. So I would wait for that before I were to get involved in gold. Well, so Google. This is a very good example of why not to gamble into earnings. Yesterday we were at 1287, and now we've lost over 100 points because earnings, they were, you know, disappointing to the street. So, you know, if you would have gambled on here, you would have lost 8% of your money overnight. So just don't gamble on earnings. Just wait and see what the numbers are. Wait and see where the market moves it. So, you know, would I be interested in buying Google here? At the very least, I would have to have a close above the 50-day. You know, on the other positive side, we're here at the third ATR channel and at the 50, and it is catching some support. You know, if it closed back above, would I buy it? Probably not. I'd feel more comfortable if it closed below, moved sideways for a couple days, showed that it didn't want to go down anymore, and then closed back above the 50. So that is my plan on Google right here, is wait for it close below the 50 and it close back above the 50. And even then, it's going to be pretty volatile. I mean, this is like throwing a big, huge boulder into a calm pond. And, you know, of course, it creates rings of water and all sorts of commotion. And, you know, it's best to wait for things to calm down and see if it really can find and prove to you that it can find some support. Right now, it's very volatile. Goldman Sachs, you know, it's rejected the 200-day moving average, which has a negative slope, so I'm not really interested in that. I would be interested here at the 50-day moving average, somewhere in this range. But it's important. Just wait for it to get, you know, if I say, hey, I'm interested in waiting for this to happen, that's not emotional or impulsive at all. I'm saying, you know, it's very objective. I know where a good place to buy it would be. If I'm trying to buy it here with nothing to buy, then that's impulsive. So look at charts, non-impulsively say, if it does this, then that might be a good entry point. Pin it on your wall, do whatever you want with it, and then watch it. And then when it does get down into that area where you made the decision when you're not impulsive, that's probably the right fit for a trade. Okay, HCA. Looks like we had earnings today. It did reject the 200-day moving average. So yeah, this one's kind of all over the place. In order for me to get interested in this trade, I would probably have to have a close back above the 200-day moving average. It's good that it's up, but it's bad that it opened so high, rejected the 250 and the 100, and then reversed. MACD is positive, so there's some positives, there's some negatives, but I don't like this type of close or that kind of formation. Biotech moved down sidewards, attempted a little rallies, come back down. I would, at the very least, have to have a close back above the 100 or a test of this bottom and or a low RSI reading like 30, 35. All right, so Intel, we talked about that. We do have that. Currently, it's a 30.56 RSI, so as long as it holds above that 30 at the end of the day, we are going to keep it. But if it does close below the 30, I will just get out and, probably take a very, very small loss. I mean, we got in at 51.04, it's 51.07, so technically it's in the money. But the bigger point I'm trying to make here is if we are wrong, most likely it will be a small wrong. But if we're right, hopefully it'll be a big right. So we'll watch this at the end of the day and see what happens. Russell 2000, it's just all over the place here. I would need this to move sidewards, have these bars start to narrow, have a stab down below the 20, and then maybe a reverse back up. But who knows if that's going to happen. So there's really nothing there. If you look at a chart long enough, you can kind of talk yourself into something. You can find something, but don't do it. I mean, once you start to understand charting, my suggestion is once you get good at it, just go right through quick. This stock, this stock, this stock, this stock, this stock. And, once you get proficient at this, you will see right away whether something looks interesting or not. But if you have to stare at it and get a ruler out and, try to make it fit because you want to buy the trade, that is not a good policy. Johnson & Johnson breaking out here. It's a 64.38 RSI. This is very volatile. I'm not comfortable getting involved in that. Coca-Cola had a big day. The defensive names are pretty strong today. I did buy Coca-Cola back here on the 9th when we closed above the 50-day moving average, these prior highs, and we had tested the 200-day below us multiple times. I got in here, I got out here. We had to get out in front of earnings, but it was still a nice trade that I phased out of. Obviously, if I would have held through earnings, it would have been great. But at this point, I wouldn't buy it here. It's a 75 RSI, so I would need this to come back down into this area. Lockheed Martin. Lockheed Martin, we actually did buy here when we had the higher low, close below, close back above the 200-day. Got in here, phased out until here, got out a couple days before earnings. Still was a profitable trade, and then did not gamble on earnings, and it went up. And since then, it has just moved sideways inside of the range of this first bar. So in order for me to get interested in this, I would have to have it I'd have to have it come back down here to the 20 or the 50 or the 200. But who knows if that's going to happen, but that's fine. I just don't want to do anything with it until I have some kind of setup. MasterCard had earnings today. Went up very strong, as you can see, but there was a lot of selling up into this area. So it's an 84 RSI. Certainly, I would not be buying anything up here, but if any of you have this, awesome. I'm glad it went up. 3M. Again, earnings, we gap down very strong. We move sideways. This is not a bad pattern. Strong day down, but then it's held. You see how it's stabbed down, but now it looks like it's going to reverse. That's a V1. It's not quite a V1. This would have to close above this bar here, but if it does close above, that would be considered a V1. I would not buy it because it's still under the 30-day, the 30 RSI. But tomorrow, if we have a move up, creates a V2 and comes from under 30 back over 30, that might be a good place to buy. If it's a huge bar and I have to buy it here, I won't buy it. But if it's, a small bar that moves up to here, then it gives me still a good risk to reward if I'm wrong, and it still gives me some profit potential, probably back up to the 200. So this one might be interesting to watch tomorrow. Altria, they just announced, the FDA just approved a new device that Altria and Philip Morris have. It's a non-burning tobacco kind of device. You don't burn the tobacco because that's where most of the harm comes from the carcinogens. This actually just heats the tobacco, and it puts out some kind of vapor that people use. And I've studied this for about a year and read a lot of reviews of the people that use this, and a lot of people in Japan use this, in Korea. And I've read a lot of positive reviews as far as it doesn't smell. It's still tobacco, but there's no ash. It doesn't smell. They don't cough as much, so forth and so on. So, I'm certainly not recommending smoking, but it seems like a safer device, and it looks like the FDA somewhat agreed with that today. So, I like the fundamentals of that, because I do think it will probably be a good seller based upon how it's done in other countries. But a lot of people in America don't know about this. But if Altria closes back above the 200, that would be an interesting entry point for me. That's right, Bruce. You can kill yourself slowly. That's it's good, because then that you can buy more cigarettes or buy this new device for longer. So that's a plus. But anyway, from a business standpoint, I think it will be exciting and have some good results for the company. Maybe. What do I know? But I have been studying it. So, but the point I want to make here is that if you have a thesis on something, that's fine. But wait for the price of the chart. Wait for the fundamentals of the technicals of the chart to confirm your thesis. So if this closes back above the 200, I may be interested in taking that today. Merck, I do like Merck. We had earnings. We've moved up. We moved sideways. We went back down, reversed back up. We're above 50 RSI. It looks like I will be buying Merck here at the end of the day. Microsoft gapped up, moved sideways. Netflix moved up, moved down, sideways. Where to buy this? Well, most likely the correct place for me to buy this would be, it's moved sideways, which is nice. So if it stabbed down and immediately reversed and went back up, kind of like Merck. The formation's different, but you see how we did go down and immediately reverse back up, showing that there were no more sellers there. They tried, but they weren't there anymore. So, it gives you a little hindsight in that it already tested down here. It didn't want to go back down. But if I do buy Merck, where am I going to, what would my stop be? Most likely the 100-day moving average, about, close to halfway, a little higher than halfway. But I would use a close below the 100-day moving average. And it looks like MACD just went positive here too. So that is also a good sign. So we have a V1, rejection of this low, strong move up, MACD's crossed over positive, and we have a positive RSI level over 50 is positive. All right. Nike is just moving sideways. We did buy this back on the 12th when it closed above this fractal. The fractal is 2 highs to the left, 2 highs to the right. We took out that fractal, closed above it, strong bar, big volume. MACD was positive. We rode this straight up and then phased out all the way up. Then when it closed, during the day, this was a 70 RSI, then it closed below the 70 RSI. That was our signal to take the trade, and that is where I got out. So that was a great trade, but right now, just moving sideways. Philip Morris, big day. That's another big day. That's a big day in addition to Altria, which is kind of their sister company. Philip Morris is the international company, and Altria is the domestic U.S. company. So they both have big days today on this news. I do like MO better. I like Altria better because it gives me more of a defined line of that 200-day moving average as my stop, compared to Philip Morris, which, what are you going to use as your stop here? You really can't use the 50. It's too close. Possibly you could use the 20, but I like the strength. I like the strength of the 200 as my line in the sand. So what is that? 54.64. So it's close. It's close to closing above. And if it does, I will most likely take a position. Okay, PayPal. Down a touch, not too much, but just too high. Still above 70 RSI. In order for me to get interested, it would have to come back down into this range, into the 20-day moving average range and a lower RSI. So the Qs, the thing that's concerning about the Qs is that we have been over 70, since about back here. So people that were in this long upward move here are very likely, some of them, when it finally closes below the RSI, the 70 RSI, will get out of the trade. I know if I were in this trade, and I would certainly get out here because it's closing under 70. Well, it's not under 70 yet. We'll see. We still have a few minutes, but so that will be interesting. Silver, strong day today, but it has the 100-day moving average in front. The 200-day moving average right above it. Just like gold, in order for me to get interested in silver here, if we had a big strong day up tomorrow, that might be one thing, but lacking that, a 5-20-day EMA crossover system is probably the approach that I would take, but we're a ways away from that. S&P 500 is, certainly there were no sellers down here. They tried, right? But it brought it right back up, still above 70 RSI. I'll be buying this at the end of the day. Square, I do like that we have a higher low here. See, we went down, came up, went down, but it couldn't quite go down and test that previous low, but it did reverse. So I like that we have a higher low in place. My buy signal here would be a move back above the 200. That would give me a good risk to reward ratio. Let's say tomorrow it closed here. Well, my stop is right below it, which is good. So if I'm wrong small. If it does trend and go in my favor, it has multiples of upside potential compared to my downside. So it looks like we have earnings coming up here. I think that's tomorrow. So I'm sure it will do something then. Pretty certain of that. AT&T, I almost bought AT&T here if it closed above the 200, but it did not. It actually closed 1 penny below. So I had to follow my rules, but if it had closed above, this would have been a nice trade, obviously, but unfortunately sometimes that's just the way it goes. Sometimes you won't get into something because you missed it by a penny and then it goes rocketing, and then sometimes you stay in something because it closed above closed above moving average, and then the next day it goes down. You're like, oh, that dang penny. But that's trading, right? It's just trading. So you just do the best you can. You have your rules. You just do the best you can. And sometimes those things are going to happen. And, don't burn a lot of calories about it. Just go, okay, I did my best. And in general, you make the right moves. But you're always going to have some wrong moves by accident or the timing. But, it's okay. It's okay. As long as you position size correctly, any one particular trade is not going to beat you up too bad. That's why that's why I take 5% position sizes, 10% position sizes, and that's about it. If I have $10,000 in my account and I take a 10% position size, I'm only buying $10,000 of this stock. Or if I'm not quite sure on the trade, I'll take a 5% position size and I'll buy $500 worth of that stock, not $10,000 worth of that stock, because then it's just, then there's too much on the line. And not only do you have the risk of losing a lot of money, but you also have the risk of not trading it correctly. You want to trade the chart. You do not want to trade the money. But if you have a large position size, you start trading the money. You're like, hey man, I'm up $783. I could go to Disneyland with that money, even though there's nothing wrong with the chart, even though you probably shouldn't sell it, but you start letting the dollars get to you. So you trade the dollars, not the chart. Take small position sizes. So not, one particular trade really can't hurt you, and so you can sleep at night. The other thing, if you're not sleeping at night and you're wondering about a position, you've got too large of a position. Oh boy, well, we sure got shook out of that yesterday, didn't we? We bought here, we phased out of 2 positions here, and then we got whipsawed to the downside yesterday, and we had to get out for a loss, and now we're right back over. Yeah, that's a tough one. I'm going to see if we can get a close closer back to here, but I'm going to let this one go for right now. Tesla, it's moved down. We've made 2 inside bars to this large bar here. Be interesting to see where this goes. What time we got? Oh, we got 13 minutes. We better hustle. Okay, natural gas has moved up since this big bar here. Not interested in natural gas. UNH has moved sideways ever since. Let's take a look here. Sorry, I'm just checking a couple things. Okay, not interested in UNH. Oil moved down strongly. Tried to do a little bit of a rally today, but it's just too much of a skyscraper move down, too strong. The dollar sold off strongly today. I'd like to see this move sidewards, stab down and reverse. Visa was much higher today and then sold off. VIX, we talked about VIX. We did hit 3 profit targets on this day, and I did hit 2 profit targets on this day. I'm definitely going to keep this. My stop would be a close below this particular the previous low here, or a close below the 30 RSI. Verizon, it's rejected the 50-day moving average. On top of it, it's still below a 50 moving average or 50 RSI. Really would not be interested in this. I'd like to see this come back down, test that 100 again, using a higher low. Energy. Well, I did buy energy here. I bought a half position when it closed under and then closed back over. But as soon as it closed below the 200, that was my initial stop. I got out, and good thing I did, right? It was still a loss, but the compounding loss would have really hurt. So when you have a stop, just adhere to it and get out. Woo, consumer staples. I really like this formation. I liked that it was above the value, came back into value, but I was hoping for some kind of V1, V2. See, this is a V2. This takes out that low. This bar here closes above that close. But it was a little high for me to take it. I would have liked this exact formation down here further. So this was a little too high for me to take. Although in hindsight, of course, it would have been a great trade. But you know, it's interesting that you're starting to see money flow into these defensive stocks like Coke and so forth. So that concerns me a little bit in the market in general. Well, this is another one we got shaken out of yesterday. This is real estate. We did buy real estate here. We phased out up to here. And then on this reversal, when it lost the 50 RSI, we locked in the profits. And it was profitable because we phased out a couple here, I think 1 or 2 there. Would I buy it again right here, right now? It's a lot of volume. I think I'm going to let it go. Healthcare rallied. It's coming into a lot of resistance, so I do not think I'm going to do anything with healthcare. I would need it to close above the 200-day moving average at the minimum. Transportation is somewhat interesting here. We've had this nice up move. We've moved down. We've moved sideways. Today, it went down, took out all these previous lows, reversed back up with the V1. That actually looks very legitimate. So let me run some numbers here real quick. You know, in the last 10 minutes, I don't speak as much because I'm having to do numbers and place trades. So hang with me through these the last 10 minutes, and then if there's any questions, I will answer them. Okay, so that is interesting right there. All right, so let's take a look and see what our Google, nothing on Google. MO would have to close above 54.64 at the close in order for me to get interested in that, because that is the 200-day. So we will watch that closely. Merck, I do like Merck there. Yeah, that is a good example, folks, of a move up, move back into value, moving sidewards. It attempted to go down, reverse back up. It is going to. It looks like it's going to close above the previous close here. If it were to close below here, I would most likely not. We've only got 7 minutes, and if I were wrong, I would use the 20-day moving average as my line in the sand. All right, so let's look at our other current positions and see what we have to do here. Dexcom, I think we agreed that a close below the previous low would be the time to lock that in. That is 121.53. 121.53, so it's still above now. So Dexcom 121.53. Boy, these are really on the button. Etsy is a close below 67.51. Intel, a close below 30 RSI. SPY. We're going to buy our overnight trade. VIX has gone back to even. Okay, well, boy, we've got a lot to do and everything is really on the bubble. So we're watching Altria. So we've got 5 minutes. Let's do one more glance over to make sure I want to buy this. You know, we had this, these are the weeklies, but we did have the big bar down, but we have gone higher than halfway of that bar, which is a positive sign. We're to 51.98. Yeah, I think that one looks pretty good. So just in the interest of time, I am going to go ahead and place Merck order so I can get that out of the way and give me some time on these these close ones here at the end.
Order partially filled.
All right.
Order filled.
Okay, I have got Merck taken care of. XTN, gonna watch that one. Dexcom definitely looks like, I'm just gonna go ahead and lock Dexcom in. It was a nice trade for us. So at one point we were up almost 10%. And so I'm gonna go ahead and get rid of Dexcom.
Order filled.
So Dexcom out of there, and then I've got to take care of it in this other account here. All right, Dexcom is out of the way. Etsy's a tough one. Gonna go ahead and buy the SPY.
Order filled.
Okay. Okay, that's taken care of. XTN is our last one, so I'm going to go ahead and get XTN. Ooh, I'm getting close on time.
Order partially filled. Order filled.
All right, looks like we've got XTN. So it looks like we have everything that we need. The only questionable one was Etsy. The low there is 67.51. It looks like it's going to close above there, and it looks like it's going to close above the 5-day as well. Pretty strong into the close, it looks like. The only question is Etsy. The low there is 67.51. Well, boy, we're certainly seeing some strength coming in here at the end of the day. I guess that is going to be about it, folks. I don't think I have time. The low 69.41. Yeah, it's definitely closing above there. So 3 minutes or 3 seconds left regardless. So
Order cancelled.
that's what we've got. So what we did is we did get rid of Dexcom today. Oops, what do we do now? Uh-oh. There we go. So we did get rid of Dexcom. We did buy XTN and we did buy Merck. So, all right. Red day today, but you know, that is just part of trading. We've had 7 profitable days in a row, which is great. But every once in a while you are going to have losses, and there are going to be many times where you have losses for a week straight or 10 days straight, and that's just part of it. But the key is managing those losses, keeping the losses small, and letting the profits run. So I do want to mention that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So if that's of interest to anyone, you feel like, you know, you could benefit from the, you know, personalized attention, please let me know. My email and my hourly rate is in the description of this video. So does anyone have any questions about what we did today? On any entries I took, why I didn't take any particular trades, or if there's a particular stock that you would like me to look at. So it doesn't look like anybody yet. All right. Well, listen. Oh, Starbucks. Yes, sir. Let's take a look at Starbucks. So Starbucks, you know, we did break over this previous range here, Bruce, which is positive. It did come at a time when the RSI is pretty high, but you know, it has had a really, really nice run. If I were to be getting into Starbucks here, I would have to wait for a pullback, at least back into this area, into value, possibly washing out this low. But I think the long-term pullback, the smart pullback, would be there at the 50-day moving average. But 69.39 is just a little too high to do anything. Doesn't mean it's not going to keep going up. It's just the tendency of when stocks and indexes get close to that 70 RSI range, you do have some sellers come in and it kind of, you know, stalls its move up. So it doesn't mean that just because something's at a 70 it can't go higher. It can go a lot higher, but just the tendency is that you know, it may stall out there. And as traders, we have to trade based upon a tendency, because we don't always know what something's going to do. Does that make sense? All right. Okay, well, listen, thank you so much for coming by today. I appreciate it. And come back again tomorrow, last day of the market. The last hour of the market. And we will go through this and we'll take a look at the positions we bought today, and we'll see what happens with them and see if there's any new setups for tomorrow. So Apple earnings will be interesting tonight. They may already be out right this second. I'm not sure. But thanks again for your time. I appreciate it. I hope you learned something. And if you did, you know, please do me a favor and hit the thumbs up button. That always helps. And you know, possibly share it with a friend. Okay, well, that's going to be it for right now. Thank you so much, and hopefully see you tomorrow. Take care, everybody.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.